Intel just exploded after hours, here's why the market suddenly loves it.
Intel just did something that has the market buzzing. It ripped higher after hours, and not by a little. That is the kind of move that makes people stop scrolling and ask one question: what changed so fast?
Here is the weird part. This is not just a random meme stock style pop. Intel's move is being driven by something much bigger than hype. The market is suddenly treating Intel like a company that may actually be turning a corner. And that shift matters.
This time, I want to break down what is really behind Intel's after-hours surge, why investors are reacting this aggressively, and whether this is the beginning of a real re-rating story or just another short-lived burst of excitement.
What changed? The biggest reason Intel is rallying is simple: the earnings story came in stronger than expected. Intel reported a stronger outlook for the current quarter, and that immediately changed how traders were thinking about the stock.
According to market coverage, Intel projected revenue of $3.8 billion to $4.8 billion for the June quarter, which is above the roughly $3 billion analysts were expecting. The company also projected adjusted earnings of about 20 cents per share, versus a Wall Street forecast closer to 9 cents. That is not a small beat. That is the kind of gap that makes people question whether they had been too pessimistic on the whole story.
And that is exactly what the market loves. Not just a beat, but a beat that forces a reset in expectations. For a long time, Intel was treated like a turnaround story with too many moving parts and not enough visible proof. But now the market is seeing signs that the turnaround may not just be theoretical anymore. That is the key shift.
Why the stock is moving so hard? There are really 3 layers behind the surge. Let us begin with data center and AI demand is improving.
Right, the first layer is that Intel is starting to benefit from the massive build-out in AI infrastructure. That is important, because Intel has spent years being viewed as the company that missed the first wave of the AI boom. Nvidia got the spotlight. AMD got some of the upside. Intel, by contrast, looked late.
But now the company is showing signs that it is finally capturing some of that demand. Intel said its data center and AI business generated $0.1 billion in revenue, ahead of the roughly $0.41 billion expected by analysts. That is a very important number, because it tells investors the company is not just talking about AI in marketing language. It is actually putting up numbers that matter.
And when a struggling chipmaker starts showing visible traction in the area everyone cares about most, the stock can move fast. Very fast. Then we will say the foundry and manufacturing story is getting real.
Yes. The second layer is Intel's foundry and manufacturing comeback. This is one of the biggest reasons people have been interested in Intel this year. The market has started to reprice Intel because it is no longer being viewed only as a legacy CPU company. It is increasingly being seen as a strategic manufacturing story. That is why headlines about Intel's 18A process node, its next-generation manufacturing technology, keep getting attention.
Intel has also been associated with a number of major strategic developments, including its participation in Elon Musk's Terafab project, which is aimed at semiconductor production for Tesla, SpaceX, and xAI. On top of that, Alphabet's Google reportedly committed to using future generations of Intel Xeon processors in its data centers.
When you combine those signals, the story changes. Intel is no longer just fighting to survive. It is trying to position itself as a future manufacturing and infrastructure player in the AI era. That does not guarantee success. But it absolutely changes sentiment. Investors were already leaning bullish before earnings.
I also think so. The third layer is positioning and expectation. Intel had already been on a huge run into earnings. The stock had become one of the market's hottest names, with some reports saying it had gained more than 200% over the past year. That kind of move means the market had already started to believe the turnaround story.
And when a stock is already under heavy attention, a strong earnings report can trigger a second wave of buying. Why? Because the report does not just validate the move. It invites traders to ask whether the move is actually still early. That is the psychology behind a lot of these huge after-hour spikes. It is not just about the numbers. It is about whether the numbers force people to chase.
But why this matters beyond one stock? Intel's surge is not just a story about one company. It is a story about what the market wants right now. The market is obsessed with companies that can do two things at once: show real earnings progress and, more importantly, plug into the AI infrastructure theme.
Intel is suddenly giving traders both. That is why this move matters so much. If Intel can prove that its data center business is strengthening, its foundry efforts are gaining credibility, and its guidance is improving, then the stock may not just be bouncing. It may be entering a new phase of valuation. And that is a huge difference. A bounce is when people are relieved. A re-rating is when people start paying up for the future again.
What is the risk? Now let's slow down a little, because this is where a lot of traders get carried away.
Yes, the stock is surging. Yes, the outlook is better. But Intel is still not a simple story.
The company still has to prove that this momentum is sustainable. It still has to show that its manufacturing turnaround can keep improving. It still has to show that demand can outpace supply without creating new problems elsewhere. And it still has to convince the market that these numbers are not just one strong quarter in a volatile environment.
That is why some analysts are still cautious. A strong quarter does not erase years of execution questions overnight.
And that matters because when a stock has already run this hard, the bar gets higher every single time it reports. A good quarter may keep the rally going. A merely decent quarter could disappoint people who are now expecting something exceptional.
Then, what happens next? The next big question is whether this is a one-night move or the beginning of something bigger. There are three things to watch from here.
First, does the market keep raising Intel's earnings estimates? If analysts start upgrading numbers after this report, that is a strong sign the rally can continue.
Second, does management give more confidence around the data center and AI business? If that segment keeps growing faster than expected, it becomes the center of the whole investment case.
Third, does Intel's foundry story keep gaining credibility? That is harder to prove, but it is probably the most important long-term factor for whether Intel can become a true strategic winner again.
If those pieces line up, this move could mark the beginning of a bigger revaluation.
If they don't, then this could just be another dramatic spike in a very emotional market.
So why did Intel explode after hours?
Because the market just got a combination it loves: a stronger than expected outlook, real revenue strength in data center and AI, growing confidence in the manufacturing turnaround, and a stock that was already under heavy bullish attention.
That does not mean Intel is fixed. It means the market now believes Intel may be further along in the recovery than many people thought.
And in today's market, that is enough to trigger a huge after-hours move. The real story starts now. Not with the spike, but with what Intel proves next.
Please let us know what you think. Please subscribe.